Hello, this is Mace Kochenderfer with Colorado Reverse Mortgage again, where I am helping you move forward in reverse. Today I got a phone call from Lois, and she's actually the daughter of an existing reverse mortgage holder, and she's the executor, but she wanted to know how and when does this reverse mortgage of her mom's get paid back. Now, unlike a conventional mortgage, a reverse mortgage does not have a predetermined payback period. The borrower may choose to make a payment, or she may choose to not make a payment. As monthly interest and mortgage insurance is charged on the outstanding balance, if a payment is not made to offset this monthly amount, then it's just simply added to the outstanding balance. This is known as negative amortization, and not being required to making this monthly payment is actually what is most attractive to the majority of reverse mortgage applicants. It's also where the term reverse mortgage originates from. It's going in reverse because typically the balance is getting a little bit bigger each and every month. It's going in reverse. Now, when the bank expects to be paid back is also known as the maturity date. This maturity date occurs when the homeowner is no longer living in the property. Of course, like any other mortgage, a consumer can choose to pay off the loan whenever they like. There are no restrictions, there are no prepayment penalties with the reverse mortgage. So if you do a reverse mortgage, you're not locked into being in this reverse mortgage for forever and ever. There's some exceptions to the benefit of the homeowner that we're going to explore a little bit later. But typically when the reverse mortgage matures, the home value is bigger than the loan balance. Okay? Only the loan balance is what is due to the lender. Many people think that the bank actually owns the home and they get the entire house. That's just not true. All that is owed the lender is the principal balance that was used plus whatever growth that occurred on that amount. Let's take a look at some examples. The numbers will vary, but the following is a typical scenario when a reverse mortgage matures. Let's say the principal, interest, and insurance has grown and the outstanding balance equals $50,000. The property is worth $300,000. So the bank is actually owed $50,000. The difference, the $250,000, is the homeowner or the estate's equity position in the property. It's pretty straightforward if you think about it, except most people incorrectly think that the bank gets the entire $300,000 house. That isn't the case. They get the $50,000. Let's look at another scenario, but let's pretend that this homeowner used the reverse mortgage proceeds to pay off their conventional mortgage on the closing date 20 years ago. 20 years ago. This home is in an area that didn't appreciate. So over the 20-year period, the money that was borrowed has grown to be $300,000. All right, now the home has not appreciated. In fact, it may have depreciated. In this example, let's say the home is now worth $200,000. So we've got a $200,000 house with a $300,000 outstanding balance. In this scenario, it's typically referred to as the home being in an upside down position. Upside down by $100,000. It isn't a nice scenario, but it can happen, and I know a lot of folks worry about this, so we're going to address it. It isn't the norm, but since it can happen, let's talk about it. A homeowner decides to move to Puerto Rico. I know this because one of my clients chose to do this. Her kids he had gotten a job down in Puerto Rico, and she wanted to follow to be with the grandkids. The home was in an upside down position. Ultimately, what she did was she packed up her stuff. She signed some papers turning the house over to the bank. Here's a scenario where the bank does become the owner, but it's at the first homeowner's request. So she packed up her stuff, she moved it out, she signed some papers transferring title to the home. They told her to leave the keys on the kitchen counter, and as she was leaving, to lock the door behind her with just the door lock. And then she called them up to notify the bank that she was formally gone from the property. A couple days later, the bank sent somebody, a locksmith, to change the locks and get the home prepared to sell. The homeowner is not responsible, or was not responsible, for the missing $100,000 when the bank sells it for $200,000. Even though there's a $300,000 loan balance on it, the homeowner is not responsible for that difference between the sales price and the outstanding loan balance. She called me actually up from Puerto Rico a couple months later, and she said everything worked smoothly. I had asked her to keep me in the loop on how it worked out, but she was quite thrilled with it. Now, reverse mortgages do exist in Puerto Rico. It is a U.S. territory. Because she transferred title over to the bank, she does not qualify to get a reverse mortgage down in Puerto Rico for a 3-year period. And that was fine with her. She's living with her kids and grandkids for the time being. So that was just one example of a home that's in an upside down position where the homeowner chooses to leave the property. Now, another scenario that happens, and this is more likely to happen than moving off down to Puerto Rico, is a homeowner has passed away and an heir has inherited the property. So again, we've got this home that's larger in loan balance than it is in value. So what does the heir have to do, or what are their choices? Well, first of all, if they have the choice, they can sell the property. But if anybody asked me, I would say, well, why would you want to do that? It's a lot of work for no reason. You may as well just turn the house over to the bank after taking whatever they want, the china, the antiques, the family photos, and any other personal items from the home. The unwanted stuff, the package of old paper plates that got lost behind the refrigerator, all that stuff can just stay in the home. The bank's going to send folks in and clean it out and get rid of the green shag carpet and get it market ready. And it's the bank's responsibility to hire the realtor, real estate agents, and move the property. So that's probably at least what I would do if I were to inherit a property that was in an upside down position. I would just take the stuff I wanted and let the bank deal with it. Now, another scenario that the heir has, or a choice the heir has, maybe they want to keep the property. Perhaps it was the home that they grew up in and they've got an emotional attachment. Maybe it's in a great area that they want to use and they want to turn it into a rental property. That's fine. They can do that, even though the home is in an upside down position. What the heir has to do is pay back 95% of the home's value. Not of the loan balance, but of the home's value. So in this case, since the home is worth $200,000, 95% of $200,000 is $190,000. So the heir, the executor, whoever the new homeowner is, has to pay back $190,000. Now, remember, the balance was $300,000. That's not the consumer's problem. So in the last few examples, it appears that the lender is taking a $100,000 loss, at least $100,000 when you factor in the cleanup and the hiring of contractors and real estate brokers. But let's not be too quick to shed a tear for the bank who just lost this $100,000. Because remember, these HECM reverse mortgages are guaranteed through the Federal Housing Administration. Think of the FHA as you would an insurance company. The purpose of any insurance company is to pay claims. So 100 people pay automobile insurance, but only one person gets into a wreck, right? Well, the same thing works. The FHA works in a similar manner. Every person has to pay, that has a HECM reverse mortgage, home equity conversion mortgage reverse mortgage, pays a premium to the FHA. And occasionally, the FHA has to pay a claim to the lender if the lender takes a loss. So if the loan balance exceeds the value of the property, only the balance up to the market value of the home is due, or again, if the heir is retaining it, it's 95% of that figure actually. The FHA covers the difference and guarantees that the bank doesn't take a loss. The homeowner or the estate is not responsible for loan balances greater than the home value because of what is called the non-recourse clause, written into every HECM mortgage. The non-recourse clause gives you the assurance that your estate and any assets in it, nor your heirs or any of their assets, are responsible for any losses. once the maturity date occurs, the lender does need to be paid back. Many loan officers will tell heirs or reverse mortgage applicants that they have a year to settle up with the lender after the date of death. That's not as accurate as an answer should be. Actually, the heir has 6 months from the date of death to settle up with the lender. If the home is being sold, but it hasn't happened in the first 6 months, well, the executor can then ask for a 3-month extension. And later, if it's needed, they can ask for another 3-month extension. So it isn't a 12-month chunk of time that an heir or an executor has to sell the property. It's actually 6 months plus 3 months plus 3 months. It's real important that there's clear communication between the executor of the property and the lender. All right, these rules, there are rules that need to be followed, and there are proper procedures. Because if these procedures aren't followed, then FHA rules require that the lender begin a foreclosure process, and that doesn't make anybody happy. So I think clear communication needs to occur between the homeowner, the applicant, the executor, and of course the mortgage servicing company when the event occurs. Thanks again for watching the videos. Again, my name is Mace Kochenderfer. I'm with Colorado Reverse Mortgage, and we are helping you move forward in reverse. If you've got any questions, just shoot me an email at mace@co-reverse.com. And sometimes typing an email can be long or cumbersome, so give me a call. My phone number is 720-828-7788. Give me a shout and we'll visit, and maybe it'll end up on the video, or maybe we can just help you over the phone if your question has already been answered. So thanks again and take care.